So Wealthsimple just launched a new product, the Bond Portfolio, a product they've been heavily pushing to their customers. In fact, I got quite a few emails from Wealthsimple claiming that their new bond portfolio currently yields 4.2%. Here we go again, Bank of Canada just dropped rates by 0.25% again. But you know what? Our bond portfolio still yields over 4%. And they're claiming that this is a reliable choice for short-term goals like home buying and covering tuition. Personally, I don't agree with that statement. If you're looking to buy a home or pay tuition in the very near future, I wouldn't exactly invest in bonds. Like, bonds aren't exactly risk-free. I'll get to that in a bit. Okay, why it makes sense. This is true, bonds usually do have reliable earnings. Low risk, that's also true. It keeps your money steady during large market fluctuations. That's kind of true as well. Fully liquid, I wouldn't exactly call 1 or 2 business days fully liquid. So that's a bit of an overstatement though. Yeah, it is better than GICs, I guess. But there's cashable GICs, which is more liquid than what they're offering here. So essentially, the bond portfolio is a managed account. The account is managed by AI or robo-investors based on what the goal of the portfolio is. So in this case, it'll be to generate passive income by investing in bonds. Now, on the surface, there's a lot of things that Wealthsimple is saying that's true, but I think they're also overselling it. Let me explain. Bonds over the long term do outperform high interest savings accounts, but it's not risk-free. Bond values will increase and decrease based on the interest rates from the central bank. For us Canadians, it's the Bank of Canada. The relationship between interest rates and bond value is actually inversely related, because a bond is basically you lending money to the issuer of the bond. And for the term of the bond, basically the company borrowing the money should give you payments as interest rates until the maturity of the bond. So if you buy a bond right now, say with a lower interest rate, and the interest rate increases in the future, well, now your bond is worth less because bonds bought at a later date pays you higher interest rates. So again, the bond's value is inversely related to the central bank's interest rate. So personally, I wouldn't bet my money on bonds as a safe haven for down payment or tuition fees. Because if I'm saving money for a down payment or paying tuition in the very near future, I don't want any risk with that money. And I'll show you why. Bond values can drop a lot even within a half a year time frame. Take a look at ZAG, one of the most popular bond ETFs in Canada. Right when COVID ended in late 2022 and early 2023, the Bank of Canada increased the interest rates by 4.75%. Guess what that did to the bond ETF? Over 20% decrease in the ETF's value in a short amount of time. Now granted, the chances of this happening in the next couple years isn't really high. The Bank of Canada has pledged to decrease interest rates in the wake of Trump's tariffs, but that's another story. But the truth is, bonds isn't risk-free, I just showed you, and claiming that it's a reliable source for home down payments and tuition payments, that's a little bit out there. So I actually don't have this account yet. However, I got this account set up and I'm putting in $2,000 to see how they manage my money. Because I'm assuming they're just gonna allocate my $2,000 into several bond ETFs. That's kind of what a managed portfolio means. Wealthsimple managing a bunch of ETFs for you, and they charge a fee. So they actually tell you how they're gonna allocate your portfolio for you before the funds hit your account. So I see ultra short-term bonds, 66% of the portfolio. That's 2/3 of my portfolio. I'm wondering if that's just one short-term bond ETF or several short-term bond ETFs. I guess we'll figure out when they do allocate my $2,000. Now, I'm transferring money from another one of my managed accounts from Wealthsimple. It's a high-risk managed account. I made a video about it last year, so if you're curious, check it out. So what we're gonna do is to wait a couple days and hopefully we'll see how my $2,000 is allocated soon.
The next day.
Okay, so it's only a day later, but they deposited my money into the bond portfolio already, which is pretty fast. They had to sell off my investments from another managed portfolio from Wealthsimple to bring it to this one, and to do it within one day, that's pretty impressive. So props to Wealthsimple, that was actually pretty efficient. And as I check my portfolio, wait bro, what? Dude, I already lost $2. Wait, how? Did Wealthsimple already charge me a management fee? I thought the management fee was baked into the price. I think the ETFs in this portfolio already lost money. Alright, you know what, whatever. Let's see what they did to my portfolio. So, ZFH, ZBI, yeah, as I expected, they're just investing bond ETFs for you. So personally, I don't know any of these ETFs. I mean, ZFH, let's Google it. The fund invests in Canadian short-term bonds to minimize interest rate risk and currency risk. Okay, so it's a bond ETF. Okay, 0.45% MER ratio. Oh god damn, that's high. So 66% of the portfolio in ultra short-term bonds. So I would assume ZST. So now we know that 66% in ultra short-term bonds is only in one ETF, ZST. Okay, 0.17% MER ratio. I mean, that's better, although mind you, Wealthsimple charges you 0.5% management fee on top of the fees that the ETFs already charge you, so the fees for this portfolio is massive. Of course, that's only because this account is a basic member. I'm using my wife's account. I guess if I was a premium member, the fees would go down to 0.4% for Wealthsimple and 0.2% for generational clients. I mean, I don't know. The ETFs already charge you a fee. I guess some ETFs in this portfolio do charge a lower fee than other ETFs in this portfolio, but after adding in the Wealthsimple cost, especially when they allocate 2/3 of your portfolio into just one ETF, might as well just buy the bond ETF yourself to save yourself the fee that Wealthsimple charges you to look after your portfolio. Okay, so going back to the email I received from Wealthsimple early February, they're saying it currently yields 4.2%. I mean, my portfolio shows 4.1%, so obviously the yield changes. Reliable choice for your short-term goals like buying a home or covering tuition. Okay, I know I only lost like $2, but if you saved up for a down payment and you need to keep that money ultra safe, ask yourself like, is this it?
No way! I don't think so, pal!
Short-term bonds are a great way to keep your money stable while earning predictable returns. If it's predictable, the yield wouldn't drop from 4.2% to 4.1% within like 10 days. So personally, I don't think that this is a product worth getting. First of all, 66% of the managed fund in just one ETF, ZST, which is ultra short-term bond ETF, with such large portion of the portfolio in just one ETF, you might as well just buy that ETF yourself and save yourself the 0.5% management fee Wealthsimple charges, or 0.4% if you're a premium customer. So at the end of the day, Wealthsimple Bond Portfolio isn't a total scam, but it's not the best option either. If you're looking for short-term savings for a down payment, then just use a high interest savings account. You don't want that money to get exposed to any risk. And if you do want to invest in bonds, just buy bond ETFs directly. Alright, that's it for today. Let me know what your thoughts are on this Wealthsimple Bond Portfolio. Leave it in the comments down below. And if you enjoyed this video, a like and sub will always be appreciated. If you're new to the channel, I make financial tips for Canadians in my long-form content and financial comedy in my shorts. With that said, thank you for watching and I'll see you next time.